Hello traders and welcome to another video review. Today is Thursday, July 13th, 2023. Let's find out what's going on the Forex economic calendar today, and it looks like it's pretty full of events. What's happened overnight? We got some data from the New Zealand in form of the business PMI, which was worse than expected. We got the electronic card retail sales data, which were way better than expected, 1% versus minus 0.2. Nevertheless, that's the end of the data from the New Zealand. Some series of the data from the UK are scheduled to release today during the London session. GDP, one of the most important data for today. As you can see, GDP is expected to drop 0.2% to minus 0.4. So any kind of a situation when the data will be different, completely different than the expectations, might result in increased volatility on the GDP, British pound related pairs. Industrial production data scheduled for release as well. Manufacturing production, trade balance, and trade balance to non-EU European Union countries. Later on, we got the EIA monthly report from the US and the Bank of England credit conditions survey at 10:30. Then here comes the series of the data from the European zone in form of the industrial production scheduled for release at 11 o'clock and economic forecast scheduled for release at 11 o'clock as well. Then at noon, we got the reminder that we are in progress of the Euro group meetings, and then of course ECB will publish the account of the monetary policy meeting, and this is scheduled for release at 1:30. In the meantime, we got the OPEC monthly report at 1 o'clock from the US. Again, some data from the UK are scheduled for release at 2 o'clock, and then we got the most important data for the New York session, PPI and core PPI from the US, and then initial jobless claims, and then of course we got the federal budget balance and Fed balance sheet. So what do we have here? Very busy day, plenty of the things can happen. The markets might react in different direction. Volatility might be increased, so please stay focused, stay in control of your analysis, and let's see how this situation looks like just before the key data are released for the public. So let's start the technical part with euro dollar first. This is daily time frame chart of the euro dollar, and as you can see, we are moving higher. 1, 2, 3, 4, 5 days for sure were green ones. Now we have the 6 day. Looks like it's going to be a green day. New high for this year was made, 1.1155. So the US dollar is getting weaker and weaker. Euro is being bought across the board. So right now, this situation might seems to be very good for the euro. Nevertheless, please take a look here. We just reached the extremely overbought market conditions on a daily time frame chart. So it's obviously already been hit on the 4-hour chart and lowers. So right now the situation is very positive for the euro. Nevertheless, we should expect some kind of a correlation in the nearest future. The situation is, from the technical point of view, the situation is clear. First, technical support is located at the level of 1.1096. and the second one is located at 1.1012. So in case of the correction or the pullback, those two levels should be taken into the consideration. The eventual target for the bulls might be seen on the weekly time frame chart. So let's just switch to the weekly, and you can see that this is pretty nice rally from the from the lows of below the parity. We passed plenty of the important levels. However, as you can see here, this was one of the most important technical resistances on the weekly time frame chart, and because it was violated, then the next target is for the bulls on the weekly, located at 1.1495. So this is the next target for the bulls, the high and the technical resistance from the end of the January 2022. All right, so it looks pretty impressive for the bulls. Nevertheless, again, we hit the extremely overbought market conditions on weekly once. We hit it for the second time. Now we are approaching it for the third time. So maybe the third time will be lucky and the market will even shoot higher. Nevertheless, sooner or later it will become unbearable from the technical point of view, and the market will of course make some kind of a correction. There is still no cross between 50 and 100 periods moving average on a weekly, so we are still waiting for this cross to happen. Let's switch back to the daily. On a daily time frame chart, this we still has been trading for above the 50 and 100 periods moving average, so there is no change here whatsoever. So this is how the daily euro dollar chart looks like. Let's switch to the British pound, because we got plenty of data from the UK, and the situation is even much clearer here on the British pound. Again, 6 days in a row of a rally, but this rally goes straight to the extremely overbought conditions on the daily time frame chart. 74, 75 almost points right now. This year high was made at the 1.3026. So right now we are heading just above this level, psychological level of 1.3, and the technical support is located at 1.2847. Only if we break below this technical support, there is a chance for some sort of the deeper pullback. Let's just take a look at the weekly, because we want to see where is the next target for the bulls. And as you can see, the key technical resistance on the weekly is located around 1.3160 something. Let's just take a look here, and let's copy this one, and this is 1.3160 something, so that's red, and this is the technical resistance. So that's the next target apparently for the bulls. There is still no cross between 50 and 100 moving average, so we are still waiting for it, but it looks pretty much impressive. And on the weekly time frame chart, we already hit the level of the 70 on the RSI, so that means the market is extremely overbought. Please notice that a correction might happen very soon on the British pound as well. So that's the situation on the pound and the euro dollar with new levels. Let's now just switch to the last market, and we are going to talk about the euro dollar to Japanese yen. Now, this is the weekly time frame chart of the US dollar to the Japanese yen. We got this situation from the last year. We went towards the 151, and then big pin bar has been produced on the weekly time frame chart, and the market went down. Will this situation repeats this week? On the lower level, this time we went towards the 145, so it's like a 500 pips lower than the previous swing high, and now we got the bearish engulfing pattern, as the automatic software says. We got the bearish engulfing pattern, and now we have the confirmation. So that's the weekly time frame chart. We are definitely going lower. Let's take a look where is the eventually any kind of a support. There you go, 137.92 is the next technical support for this market. We are just about to approach this level. Of course, what I mean is this level here. Now on the daily time frame chart, we definitely going down, because the market's conditions went from the extremely overbought towards the almost extremely oversold. few days in a row the US dollar to Japanese yen is going down. So what it looks like is like the people are selling US dollar and buying anything else, selling US dollar, buying Japanese yen, selling US dollar, buying euro, and buying pounds. So the US dollar weakness overall on this on the forex market is pretty much visible. And for the last market, let's take a look at the US dollar index, and it's pretty obvious that this US dollar index is trending lower. So now US dollar broke below the technical support. You can see it here, 179 points. So that used to be the technical support. Now we broke below it. Even the daily candle was closed above this below this level. We have a new low, 131, into the extremely oversold market conditions. So from the technical point of view, we should see some sort of the pullback soon on all of this markets and all of this forex pairs related to the US dollar, unless this is more likely unless this is like a more secular downtrend, which will result in new lower lows on the US dollar markets and the index, of course, as you can see here, for pretty much almost year and a half we've been trending higher. Right now the key technical support was violated, and we are trending on the weekly time frame chart below 50 and 100 weeks on the US dollar. So the market is obviously moving lower right now. So what we can count on is just the regular pullback on the daily and 4-hour chart, and then downtrend continuation on the US dollar index. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.